All right. Good morning. I want to welcome you all to Marketing. My name is Don Gayo.
Watching.
All right. So please, for those of us that can hear me, if you can hear me clearly, please send a message. Hear me. Just type yes. Type a yes if you can hear me clearly. All right. So thank you very much. Thank you very much. All right. So as I said, my name is Don Gayo. Be your pilot for today. So we are going to start off our analysis looking at the fundamentals. So we'll be looking at some of the news events that are scheduled for, and then after that, we'll now go into technical analysis. So as usual, using Forex Factory calendar, and then some of the events, currency pairs that are likely to be volatile. Okay. And we always say it's very important that you always check your calendar whenever or before you take your analysis for the day. All right, so let me share my screen. All right, so I want to believe you can see my screen. All right, so today being Tuesday, so you can see where we are currently. So I'm looking at the calendar. Today is Tuesday in 2002. And you can see clearly that just had the news on the payment count and the average earning index came out positive for the pound. And the next news that we have in store for today by 1:30, and that news is CPI, the Canadian dollar. And afterward, we have another news for users. After from 2:15, we have speeches. Today, the major news event that we have is handle. What that simply tells us is CAD likely be the currency that is going to be very volatile to. So possibly before we run up our analysis, possibilities that are available on the card, that is considering the fact that CPI is poised to be. Now, if you look at the focus and the previous, you notice that for the CPI month on month, it's forecast that the CPI is going to be higher than the previous. The analysts are suggesting that CPI for the car today is likely going to tick higher than the previous. So what we will be expecting is the actual. If the actual comes out and then it turns out to be higher than before, then we should expect an instant volatile move to the upside. But if the actual comes out and it turns out to be less than what was forecast, then we should begin to see movement to the downside. So for now, we should have it at the back of our mind that since the forecast is saying 0.7%, there's a tendency for this number to be higher than the previous. What this is simply telling you is that it's forecast that the current value, which we are, the actual, is likely going to be higher than the previous. And if that happens, then we should expect an appreciation in the Canadian dollar. So that is it for the technical, for the fundamental news that we have available. And so let's quickly go to technical analysis or the charts and see how the stuff. All right. So we will start our analysis by looking at the dollar index. So we'll be starting with the dollar index. We'll plot the chart of XY. Then we'll do some analysis in potential. We'll have it at the back of your mind that the dollar is very strong fundamentally. So all the data that has been released past few are suggesting strong dollar. So expect a continuation of the uptrend dollar. So let me quickly share my screen. So chart. All right, so this is what we have on the dollar. So you notice that we've been in an uptrend a very long period of time. And there's a tendency that this uptrend might just continue because the fundamentals are looking very good for that. Usually, I will be starting my analysis on where we are. So I am currently on D1, that daily charts, that is daily candles. And we have seen that this month, from last month to this, we've seen a steady rise in the dollar. You can see how the dollar has been almost 2 months now. Right, so what should we expect? So I will be anticipating that the dollar will run above that high we see. You can see this level I have experienced. So I'm anticipating that the dollar should run above that. That high happens to be last year's price, last year high price. That is a high of October. What I want to see right now is above that high. It may not happen immediately. It may not happen immediately. We expect that the dollar will continue to appreciate because fundamentally there are a lot of that are supporting the upward movement dollar. And one of it being the fact that interest rate cuts, the cut of interest rate has expected to have to be forward next year or back. So because the Fed is has been estimated that because of the data being released, Feds are likely not to cut rates anymore. Interest rates is potentially or likely going to cut from next year. So with that in mind, investors are dollar. So as of present, they are in risk-off mode. So you notice the market is in a risk-off mode. Risk-off mode is simply when other currencies depreciate, where money moves from other foreign currencies to the United States. That is exactly what we see. Especially with the crisis in expected that the dollar should gain more strength because of the crisis in the Middle East affect currencies, the dollar, the Japanese NZD. So currencies like the US dollar and the CHF should be the favorite currency for this. So I'm anticipating that the dollar will run up to that particular high. Now, it's possible that we might experience a mild retracement. It's very likely, it's possible that a retracement can occur. But whatever retracements or whichever retracement that may occur in the market may not be long, just be short retracement. So if I draw my feed from this particular move all the way up, it's possible that we might experience a very mild retracement of this particular move. So market might, dollar might retrace it upward movement. But on the long run, expect that we see a steady run upside on the dollar is bullish. With that being said, we can now look at other instruments. Let's now look at the USD, Euro USD, see what we can do. All right, so this is USD now. Yes, so we can see the steady movement. I'm on H1. My chart here is H1. So you can see the steady movement of Euro USD to the downside. And from the look of things, doesn't look like there might be a replacement anytime soon. So we may not experience any replacement. But at this point, what we should be asking ourselves is, if we are going down, how low can we go? Like, to what extent should we expect this instrument to fall? So we're expecting a fall all the way down to around this region. I'll mark it out with the red line, all the way down here. So I'll be expecting that the Euro USD likely push down to take out this particular load that is there. Now, if you look closely, you will notice that this here is a region of or an area of strong support. This happens to be an area of this support area. What you should be expecting is at least a slowdown. Once the market gets all the way down to that region, then we should expect a slowdown in price. But for now, we'll be anticipating a run down to that particular region. And if we expect a retracement might fall when we have exceeded this particular load. So retracement is possible within this particular area. But for now, we should expect a push all the way down to that region. And only a retracement possibly once we are in, then I will be looking expecting a retracement. What do we do for? So let's see if we can get entry points. You can see how the market has been dropping. So already the market has exceeded last week's low price. So this is the first price for last week that we have low from last week's low. So this is last week's low price, which means we already exceeded the lowest price from last week. There's a tendency for us to continue our movement to the downside. Let me zoom in. It's possible that we might just continue our move outside. Also, if I drop down to the H1, and go down to H1, this is H1. Yes, so there's a very likelihood that what do we do? Notice that we have already we've broken this support. We once had a support at this closing, have a support at this return, very nice support that was broken. You can see that the market broke the new support and then came back to retest. So we've retested our support, and right now we are pushing down. So there's a tendency for us to continue all the way down. So what do we do at this point? I will want to go in for the buy. So let's hop in and then take the buy trade. So if I'm buying, where would I be placing my stop? Place my stop loss just above this high. So I'll take a buy from where we are currently. The stop loss just above this recent high, and then my TP somewhere below. So let's look for best opportunity at this. Right now, I'll be going in for buy. I'll click on buy button, and then I will set my stop loss just above this high, and then my take profits below. This will give me a risk. This is a ratio of 1:2. All right, so I'm placing my stop loss exactly 1 pips. So my TP at 21 pips. So my stop loss is at 11 pips, stop loss, and TP at 20 pips. All right, so you might be wondering, why did I place the stop loss? All right, so I'm placing that stop loss there because I am anticipating that I'm placing that stop loss there because I'm not expecting the market to run above this support. Notice that we already have a support here. So I will not want to see the market break above. At this point in time, we have already tested the support, and then we are on our way down. So if it breaks above and then takes out today's high price, so if I put on the D1, that's the daily candle D1, notice that my stop loss is exactly at above the highest price for today. Highest price for today, that's where my stop loss. So it is very unlikely for instrument to run up that high. So there's a tendency we might continue going down. But if we don't go down as anticipated, then I will be exiting my trade where we are, at that particular point. Now, how low can we go? You can see from the chart that we have this level down here. It's possible we might run down here, but since most of us are intraday traders, we may not want to trade that long. At the 20 pips, you can be out of it. Else, long-term trader will want to put his stop loss, it's all the way down there. All right, so, but for sake of day trading, just place our TP at about 30 pips. Exactly, I'm currently at 30, just 30 pips, and that will do. So 30 pips, and that will be it. So, let me quickly. So my TP is at, so you can see that my TP is at 1.06284, and my stop loss is at 1.05870. So you can see if you were able to take that trade, we just started, the profit is very tiny, but it's a good move. So our stop loss is at 1.05870, and the TP is at 1.06284. And we entered at the current market price. We've just taken the trade at the current market price. We hope to catch just 30 pips from today's move. So 30 pips from today's movement for this particular trade we have taken, the amount to about 34K. It's just a small amount, but it's a good scalp. So the trade is still valid for those of us that what did I just? All right, so quickly, let me take your question before we have any questions. Okay. Okay, please give me a few minutes. Let me cross check. All right, so let's look at another instrument now. Let me quickly look at gold. Or can someone in the audience suggest an instrument you would like us to look at? All right, so drop the instruments you would like us to quickly look at. But for now, let's look at gold. So let me share my screen once again. All right, someone is suggesting GU. All right, we look at GU. Press 100 GU. All right, I think we should start with GU. Let's quickly look at the pound US dollar. So let me look for that currency. All right, so I've seen it. So let me share my screen. All right, so this is EU, that is pound USD. Just like other Euro USD, we expect the same on GU. So what do we expect now? You notice that we are back to our support area. So you notice we had this support level, which has been broken. Some will call it support, some will call it supply and demand, whichever you call it. But most important thing is that you're drawing your level well. So we have this level where expect the market to respect, but you see how we broke and then we are back up. Now, this movement to the downside was because of fundamentals on G not too long ago. And so from where we are now, we still anticipate that we might see a continuation to the downside. We might just see a return to the downside. So if I drop down to H4, on our H4, this is. So one of the things I normally use in my trading is I look for market to go after those previous week's low, just night's low, or previous month's low. So we just exceeded the previous week. Where we are. Last week's low price. Then notice how we have exceeded it with this nice reversal candle. Nice reversal. So there's a tendency for us to experience a mild retracement. Yes, I'm not expecting a reversal from this particular point, but what I want to see is that there might be a slight retracement. Now, the question most persons will be asking is how low can we, or how far can we retrace? Now, this is another level you want to also find. This is how we advanced out of this point. There's a tendency that please, for those of us online, can you please we've just bounced out of this area. Now, this is an area where we refer to as the fair value gap. We have moved in and then we've dropped out of that particular region. It's expected that whenever the market exceeds the low, just like we have here now, last week's low, any of the lows, once the market exceeds any of the lows, then you should expect a retracement. And that's exactly what we are seeing. We haven't exceeded last week's low points. We are expecting that there should be a kind of retracement. For how far should we be expecting such a retracement? Now, I would prefer to use the Fibonacci to give me a clue as to how far we're actually. If I pick from today's high price all the way to today's low price, I'm only looking at where we should expect to. We are already in this region. Means from where we are now, it's possible we can continue our movement to the downside. And for those of us that are scalping, our stop loss may not be that much, so we don't need so much stop loss for scalp trade. So quickly, let's take a sell trade on pound USD. So I'll take a sell, and then my stop loss will be at around 1.2550. I'll put up a sell. I'll take a sell right here now. I've just placed a sell trade on pound USD. And then my stop loss is going to be exactly above 1.2455. I'm placing it at 1.550. That's my stop loss. So my stop loss is 15, and then my take profits about 30 pips. My TP is going to be at 30 pips. So where we are now is currently 30, and that's for this particular trade. So I'm risking 18K, that's 15 pips. Gets about 34. All right. Now, what if the trade doesn't go well? Or what if the trade doesn't move as anticipated? There's no problem. I have a very small stop loss like this. But with the fundamentals on our side, expect that we should go down at least to this value. I can afford to put my stop loss, my TP below the low. So notice that my TP is just below this particular low. And that gives me a price of about 1.24060. TP is at 1.2406 and stop loss is at 1.2550. So this is my analysis for A. Now also you should have at the back of your mind that it's too early to be expecting any movement. Take note that the fundamentals are the reason why the market moves. So movement that we should be expecting should be when we have major news. And that major news is around 130. So you shouldn't expect any reasonable move now and then. There is not much on the calendar this particular period. But for those of us that are available, can take this particular trade on pound USD sell. Go in with a sell, place your stop loss at 1.24550, place your TP at 1.2406. Go in with a sell. Don't be afraid. Then I think that is it for GU. So take note that the secret to successful trading is to always make sure that your losses are minimal when compared with your profits. To always ensure that you keep your losses as minimal as possible, that you can get a much or a good profit. All right. So with that being said, I can switch over to another currency or another instrument. Give me a few minutes to look at the chart and see which other instrument is being. Okay, someone is asking for stop loss. The stop loss is at 1.2. Stop loss is at 1.24550. That is 1.24550. 1.24550. That is the stop loss. 1.24550. So once you've entered the trade, have a little patience. Allow the market to do its thing. It's too early for any movement because we do not have any fundamentals today. Fundamentals will be in the afternoon as around 1:30. So expect that. Okay, so someone is also suggesting US 100. So let's quickly look at US 100 and then USD JPY. So fundamentals favor G. Yes, fundamentals favor, not the fundamentals does not really favor G. Favors the US dollar. So we expect EU, we expect the pound USD to drop in price. Okay, that be all right. So for the USD JP, for the GU, which we just taken, entered at the current market price. So the selling or the entry is at the current market price. So we just sold at the current market price. So that is exactly where we entered. Okay, so let me pull up the chart of US 100.
Show your screen, sir.
All right. So give me a few minutes. Let me for US. So this is US 100. All right. So this is US 100. So we've seen that on US 100, we've actually broken out of the range that we had. So like I always tell people, whenever you're trading US 100, I will not suggest you sell. Yes, even though the market is giving you reasons to sell, I would rather wait for a buy than a sell. So it is anticipated that this is going to happen. So notice how we have exceeded or broken out of this particular range. So we were once in a range. There was a fake out, so you can see the fake out. So we once were in this range for a period of time. So there was a fake out, and then we came back into the range again, and now we are moving down. So for US 100, my opinion, I would always suggest that trading this guy opportunities to buy rather than to sell. The reason is because this particular index is comprises of several companies, that is existing stocks. So which means there's a tendency for this instrument to continue the upward movement. Yes, so it's very possible that whatever selling you might experience on this instrument may not be a long-term selling. If you look at this instrument from way back, you know, this is as far back as as far back as 2007, 2017. Notice it has been in a steady uptrend. This is M1, so this is monthly candles. So it's very unlikely this massive fall that you see here was during COVID. So you should not expect the currency to fall long. What we mostly experience on US 100 are retracements. What you want to do, where the drop will most likely end so that you buy. That's my suggestion. Those of us that are very aggressive in trading, you might want to sell down. Yes. One of the things you must have in mind is that if the dollar is strong, then the indices will be most likely will be weak. Because in an economy, whenever the stock market is booming, when the stock market is doing well, and you know that the indices are composition of different stocks. So when the indices are moving in an upward direction, then it simply tells you that the currency will do poorly, will perform poorly, which means whenever the indices are appreciating in value, money is being moved from the banks and investments are being put into these stocks. Money is flowing into these stocks. And remember, what are stocks? Stocks are simply companies that are in existence. So when money flows into these stocks, they will appreciate. The value of the currency will depreciate. So whenever you notice that the US dollar is appreciating in value, then you should expect that the indices or the index will most likely depreciate, or there will be a mild retracement. So we should expect such to occur. You need to also understand the relationship between the indices and currency pairs that we trade. So how low can we do? So for those of us that want to, weigh in on the movement to the downside, you can sell, but I will not suggest to sell. But those that do not want to wait for the market to settle down before this thing, can sell. Else, I will suggest you wait for the market to retrace or to drop at least this area. So look at this area that I have just marked in this area. Let me change the color so that you can see. So this is where I will be more comfortable to take a buy. Green area. So this area is labeled as green is where I will be more comfortable to place or to go in for a buy trade. Yes, somebody might argue, some of us might argue, if we are setting the market to come down here, so why don't we sell all the way down there? Yes, you can. You can. But I will not suggest to do that. I will not give you any sell trade based on that. I would want to come down here or I place a trade. Now, if you look at the history of this particular instrument, you notice that market has usually been bouncing off of this area, which we term as some people call it support and resistance, some call it supply and demand. So whichever you call it, doesn't mean anything. It doesn't matter. Some will refer to it as a fair value gap. So you see, as the market has traced down into this area, take note that we had a gap. I don't know if you can see my cursor. We once had a gap here, and the market will most likely come down to fill up that particular gap. So that gap has to be filled for a continuation to the upside. So for those of us that are that really want to catch a big move on US 100,
no, it's not that one.
you can wait for it to retrace down to this region. You can see the gap. You can see my cursor. Please, someone is unmuted. Please mute. So you can see the cursor down here. You can see my cursor down here. I will be expecting the currency to retrace down to this point, likely inside this area, my support area, or I will buy. So this is what I'm saying. I want to see a movement down here, and then afterward, a continuation to the upside. So long as the US dollar remains strong, then we should expect this instrument to move down. So, but can we sell? Of course, you can sell. So let me quickly give you my own, for those of us that would want to sell, let me give you my view on what to expect or where to sell. So to sell on this guy, I would want to see a mild retracement, honestly. I want to see a retracement. So I want to see the market retrace a little before I go in for a sell. Else, it's a dicey situation. I want to see the market retrace to at least this area. So if I can get a retracement to this area, I'll be much more comfortable selling. Remember that we have just broken out of this range. Look at this range, which I marked earlier. So on the H4, you will see the range very well on the H4. So we have just broken out of this range. This blue box you see. So one of the things that is possible is a retest of this range low. So we would likely, or we most likely want to see, I want to see a retracement to this range low before we continue to the downside. So for me to be taking sell, I would prefer to sell at that point rather than where we are. So I want to sell within this region. So which means if we are expecting a sell, then a buy from this point all the way up there is valid. A short-term buy is valid. But for now, I would wait for the instrument to trade up here for all the way. All right, so that's my view on US. I don't think I have any clear entry on US 100. All right, so let me look at the next instrument that's here. All right, so someone is asking for USD/JPY. Let's look at USD/JPY. So let's look at USD. Now, one of the challenges with USD/JPY is the fear of intervention. So there's a possibility, there's a likelihood that an intervention is imminent. Intervention from Bank of Japan. So with that being said, if you are trading USD/JPY, you want to be very cautious because from the history, if you look at the past information or past data on USD/JPY, anytime USD/JPY exceeds 154, anytime USD/JPY exceeds that value, there's always been a sort of intervention. So let me point that. So this is 154.8. This year also is 154.8.
Sorry, sir, we can't see your screen.
Okay, all right. Sorry about that. Thank you so much. All right, thank you. Thank you for that. Okay, so on USDJPY, the challenge, the problem with USDJPY is the fact that there's a possibility of an intervention taking place by the Bank of Japan. So usually, what you notice is that whenever the market hits this particular price, this is 151.8, and see it up here. Whenever the market hit this price, the Bank of Japan usually steps in to intervene. And whenever it hits, again, look at it, we notice when it gets there again, there was an intervention. So this movement to the downside are usually intervention. But what they normally do is that they intervene only when the dollar is weak. So if the dollar is still experiencing strength, they may not come into the market to intervene. So once you notice that the dollar is weak, then that's the opportunity for them to jump in. And in fact, yesterday, there was a statement by one of the officials of the Bank of Japan stating that they are watching the markets to actually take action. So what do we mean by taking, what did he mean by taking action? It simply means that they are sitting on the sideline, observing the markets, and then they are ready to intervene. Most of the times, the Japanese government or the Central Bank of Japan feels that market is being manipulated against them. Yes, they normally talk about allowing the market to move on and so forth. They are of the opinion that some forces are moving the market against their position. What am I saying in essence? Those of us that want to trade USDJPY want to be very careful, because we've already pushed past the price that normally attracts the Bank of Japan to intervene. I think just a few of us in the audience will know how an intervention looks like. If you have ever been in a trade on USDJPY and then an intervention takes place, usually bloody, very bloody. So you want to be very careful when trading this particular instrument, because we are now in the region where the bank is likely to intervene. Now, what do we do? Why do they intervene? They simply buy up the Japanese yen. So they buy up the Japanese yen and sell more dollar. And once that happens, the price will crash massively, massive crash. You want to be very careful trading this particular instrument. In addition to that, whenever an instrument has gone this far, technical analysis usually becomes a big challenge. You want to fall back to fundamentals. You want to look at the fundamentals more, because we are already in an extreme overbought region. We are in an extreme overbought region. So you may not have much information to run a technical analysis. Because if you look at the price action, you notice that to the back, there are no price action. So this is weekly time, this is a monthly time frame. Look behind from where we are currently, there are no price actions at this particular price level. I don't know if you understand what I'm saying. So what I mean is, if you look to your left, there are no price action at that point. Please, you can't see any support, you can't see any resistance, you can't see anything. So we are now currently in an untraded region. We are in a region that has not been traded in years. So technical analysis is usually difficult at this stage. What you want to rely on is your fundamental analysis. That is it for USD. Because if you want to do any technical analysis and you don't have data at this current price from the history, there are no information, no price data from this point in the past to base your analysis on. The only thing you can see here is a steady uptrend. So when you are trading this guy, as of now, please be very, very careful. But for USDJPY, that's my take on it. I would rather stay on the sideline than trade USDJPY. Try to look at other instruments than trade USDJ. All right, any other question? Okay, so please let me go through the questions in the chat. And then, all right, so let me see. All right. All right, so please, if you have any question, I'm going through the questions in the chat. If you have any question you want to ask, this is the time to ask the question. We will look at one more instrument before we call it. So we have looked at Euro USD, we have looked at Pound USD, we have looked at the USD JPY. I've given you my thoughts on US 100. Someone is suggesting gold, so we look at gold before we run up. What if you place a sell on USD? Yes, so someone is asking, what if you place a sell on USD JPY in anticipation for a crash coming? Yes, it's a good idea. You can place a sell. You can place a sell. But you know, as the current moment now, if you look at what we call the retail sentiment, you notice that majority of retail traders are selling already. So if you look at the retail sentiment, you will notice that majority of retail traders are selling USD JPY. So let me quickly show you what I mean by that. So my network is bad. So let me share my screen so that you can have a clue of what I'm talking about and see what I'm saying. Let me quickly. All right, so what you are currently looking at here is the retail sentiment. Now you can see that USD JPY, on USD JPY, this is USD JPY. We have massive selling. You can see that retail traders are massively selling. 70% of retail traders are selling, and just 24% are buying. Now, this sell on USD JPY has been on for almost a month. So if you look at the chart of USD JPY, notice that even at the point where you should have expected it to drop, it didn't drop. It still continued pushing higher, was still going high. So that is because of the selling that was taking place or happening at the retail level. So retail traders are selling massively. So whenever there are a lot of persons are selling a particular instrument like that, it's usually not enough for when you expect it. So, but what you want to do, I'm responding to the question, comment. So what you want to do is to start seeing signs. That the drop has commenced. But if it's for this intervention I'm mentioning, you may not see any sign. The market will crash in a manner that you will not even believe it. Like you cannot even, in fact, it's not something to be, it's not something to experience. So it's a very crazy crash when it falls. Very mad, very crazy crash. You have your time, go back to the charts and look at previous years. What normally happens when this happens, when it's up. And you will see that it's a very massive fall. So, and then we are currently in that region where such normally occur. So yes, someone is also asking, will Japanese situation affect all Japanese pair? The answer is yes. It affect all Japanese pair. And so all the currencies that has the Japanese will be affected by that. So that is it. So let's see if I have. All right. So the next thing we want to look at, we'll look at, and then afterward.
Sir, please, your screen is not viewable. We are not in another.
Yes. I'm yet to share my screen. I'm about to share my screen. I want to just show you one or two things before. So on this particular issue, let me share my screen to show you something. So for Japanese yen, yes, it affect all the currencies. It will affect all the currencies that have the Japanese. Let me quickly share my screen and then show you. This was the interview with this guy. He's one of the cabinet secretary of Japan. So this is one of the was yesterday, early this morning, not yesterday. So this is what he said. He said that they will not comment on forex level, currency intervention, excess forex volatility. It's undesirable. So look at what he said. So he's saying that the current movement, now listening carefully, that the current movement on the Japanese end is undesirable. The guy speaking should please listen. And then look at what he says. He says, prepare to take all measures. He says they are watching closely. Watch this now. They are watching the FX moves and that they are prepared to take all measures on FX. Very important things to know. Very important. So this was on Tuesday. That's today. So this comment was made today. So this is a quote. So you can see that whenever they start making this kind of statements, they are telling you that the move they are experiencing on their currency is undesirable and that they are prepared to take all measures in markets. That tells you that these guys are likely to intervene anytime soon. Very likely to intervene. So you want to be very careful while you trade these particular instruments. As a matter of fact, all the currencies that has JPY embedded in them. All right, so I want to believe that that question is answered. Then, okay, so let's finally look at gold. So the last one here will be gold. And then after that, we will let me share my screen so that we can see what's happening on gold. Let me Okay, so this is gold. I'm on H1 on gold. So this is gold. All right. So on gold, just like we mentioned earlier, I will be expecting a movement to the downside, a sell. So I'll be anticipating a sell on gold because just like we said, that this instrument has a tendency to go down because of the strength of the United States dollar. On gold, I would rather sell than buy. Now take note that from yesterday's move, look at this massive move on Friday. We can see that we've already retraced to around, a reasonable point. So which means we have retraced all the way up to, this is our 50%. We've tested our 61.8%. This is Fibonacci level. So we just tested this level. And then there's a high tendency that we might drop from this particular region. How low can we go? So if we are selling our gold, sell gold, I would be expecting that we sell all the way down to this area. Now, take note that for the past few weeks, there's been a discrepancy in the movement of gold because when the dollar is strong, expected that gold should be weak, but that has not been the case the past few weeks. Notice that even with the strength of the dollar, gold has been appreciating. Previously before this time, it hasn't been so. Gold is usually negative correlated with the dollar. So anytime dollar appreciates, gold will drop. Dollar drops, gold will appreciate. But in recent times, we are seeing something completely different. Gold is appreciating while the US dollar is appreciating. So at this particular juncture, we are trading gold, which will be more of a scalp. That being said, I would still go in for a sell on gold and target this red line, this area. So if we are to go in for sell on gold, you can see how we have bounced off of this particular region and then we are headed down. So what I want to do is to wait for a mild retracement. So I would suggest we retrace down here. So a pending order might most likely be appropriate. A pending order at So we can place a pending order at this particular price. Let me sell limit. So a sell limit at this price is appropriate. So sell limit at 2378. Let's say 2378. So sell limit at 2377.77. 2377.77. So what I want to see, gold, I want to see gold retrace up to this area, or we potentially drop down this particular region. That's what I'm anticipating. So if we place a sell limit here, please always ensure that you place your stop loss. Always ensure that the stop loss is in place. Yes, because whenever the market doesn't move in your favor, it is the stop loss that is your next line of defense. So it is only the stop loss that you can use to minimize your loss. When it comes to trading, your task, your major task as a trader, always ensure that you minimize your losses and maximize your profits. In this instance, I have just placed a pending order, a sell limit at the 2377.77, and then I will have my take profit at, this point. My take profit at 2341.92, the stop loss at 2386.82. I'm going in on gold to buy a sell limit on gold. Sell limit at 2377.77, and take profit at take profit is at 23, let's call it 2340. 340. Point 0, 2340. All right. That is it for analysis. So let me go back to, if you have any question based on what we have said, attention, you can drop your question. Someone is asking, all right, so someone is saying it's on US 100, buying since yesterday, and it's selling. Now, I cannot give you any advice because I'm not seeing your chart. So I don't really know where you bought from. And I don't know the lot size you used buying. Yes, so I cannot really tell you what to do because I cannot see your lot. I don't know your lot size. I can't see where you bought from. But like I said, there's a tendency for the instruments to depreciate or to retrace because currently the dollar is strengthening. The dollar has strength. Anytime the dollar is strong, we expect the indices to drop in value or to retrace. So we expect that that particular index will retrace a little. So, you can send a screenshot depending on your region. Any of the instructors, and then I think that is it, guys. I want to thank you very much for giving me your time. And for those of us that missed the YouTube page, type in Rally Action recorded segment. Thank you very much, ladies and gentlemen.